Morning, Mike, and thanks again for joining us on the day of ANZ's full year profit, speaking with Blue Notes. It's your final profit as CEO, and it's another record, but it's probably fair to say that it's a solid result rather than one of your great results. Operating conditions have been very tough. Were you satisfied with this result?
Yeah, look, I was. I think it was a fantastic result for most of the divisions. Australia had a very strong result. It was, the growth in market share as well as producing a record result. New Zealand continued to perform incredibly well. I was really pleased with that. Wealth performed very well. Asia was up, and certainly, the only downside really was a little bit, there was a bit of a weakness in the very last quarter from global markets, which was unfortunate. But if you look at banks like JP Morgan, Goldman Sachs, they've all experienced the same problem. This was a market phenomenon. So, that took a little bit of the shine off it, but I don't think it takes away from the fact that this is a very good result. And as you say, another record.
A lot of that New Zealand and Australia result has been built on consistently growing market share.
Yeah.
Can you continue to do
well.
that? And in Asia as well. Is it sustainable then?
Oh, I think it is. And if you look at the growth that we've had in Australia in particular, in retail and commercial, we've now focused more on those growth areas, particularly New South Wales, where we're underweight. I really am a great believer in New South Wales. I think it's a state that's on the move. It's got a really good government at the moment, and we're seeing the business activity increase. New Zealand, look, the simplification in New Zealand, the focus has had a dramatic effect, and there's still opportunity to grow. And Asia, we've scratched the surface there. The opportunity is huge. So I think we're in a really good position right now.
You talk about the positive impact of the government in New Zealand. There's a new government in Australia as well, and when you look at some of the confidence polls and some of the other polls going, there seems to be some signs of confidence in Australia. Are you seeing that?
Yeah, we are. Confidence plays such an important part in any business. And people borrow money, spend money when they're feeling good about the place. And I think that governments probably don't spend enough time thinking about how they create that confidence. You're right, in New Zealand they've done it. In New South Wales here they've done it. And now we're getting it at a federal level in Australia. I think that's very positive for the future.
And you touched earlier on what happened in the final quarter with the markets business in particular, and there were the global factors there. But we are also seeing you talk about bumping along the bottom of the credit cycle. Is that going to start to bounce up? I suppose the question is, what happened in the fourth quarter? Is that going to lead to a tougher first quarter, second quarter next year?
No, I don't necessarily think so. I think it really is bumping along the bottom. I think the issue there is that we're not getting the right backs we had, but we always say that we won't get them. It's amazing how they suddenly appear, So I'm not too worried by it. And, I think, as I say, it's not going to get better, though, in a credit sense. We really are on the bottom.
And the other thing you mentioned is the Asian footprint is complete. What do you mean by that? Does it mean that the Asian business is fixed now?
Oh, no. That's our geographical footprint. We had two gaps in the greater Mekong area, which was Thailand and Myanmar. We had rep offices there. We didn't have full operating branches. Having got those in place this year, we've now got a complete network. But we have to build that. There's still an awful lot of growing to do.
And it's still the right strategy, that being a part of Asia strategy?
Oh, absolutely. It's in terms of that regional footprint, that super regional footprint, that connectivity is going to be even more important for the next 20 years than it has been for the previous 20. So if you look where we've come as a country in terms of our connectivity to the region in the last 10 years, that's going to be exponential growth in the next 10. So, we're absolutely in the right place.
And to come back to Australia, one of the most controversial things in recent weeks in Australia has been the interest rate rises by the banks on the the variable rate mortgage book.
Yeah.
How do you balance, whether it's the customers pay or whether they're shareholders?
Look, it is a balance, and it's not an easy easy balance to get exactly right. But the issue is that when you have regulatory capital imposition, somebody has to pay for it. It doesn't come for free. Now, we've seen the shareholders take a lot of the pain since those announcements. Share prices have dropped by 20%. They have taken a fair amount of that pain. So it's appropriate that customers have to take some of that pain as well, in terms of the benefits of having stronger banks.
Unquestionably strong is the phrase that's used about banks. And you've said that the bank, ANZ and Australian banks in particular, are unquestionably strong. But does that mean that shareholders should accept a lower return if they're a lot safer?
Fundamentally, you've got to remember that banks are a leverage play at the end of the day. And as a leverage play, they are therefore going to be inherently higher risk. And therefore, are they likely to attract the same return from an investor as, say, a utility, which is geared one-to-one? Quite clearly, no. And therefore, I think investors will always expect a high return from a bank for the higher risk that they take.
Thanks again for speaking with Blue Notes about this year's profit. Thanks, Mike.
Thanks, Andrew.